Alright guys, welcome back on the channel. So let me give you a quick update of when things go wrong with high risk pools. Actually, I'm recording this the next day after my latest one, where I did the week roundup for my yield farming positions here on PancakeSwap on Solana's farms. And if you go ahead and watch that video, this position before it was in range and it was worth $80. But overnight, what happened is that the price dumped from this 75 range down until 56. So overall 25% drop in price, and you can see just that. I had the position worth at around $80 and now it's worth $60. Now this is when things go wrong. Couple of things you could do. Number one, do nothing or expect for a potential bounce back up, which is still very much possible. If you look here at the chart, not long ago on August the 28th, it wasn't a massive rally just that happened overnight, but in a matter of a day we can see that it went from at August the 28th 1:45 a.m. and on August the 28th at 7:15 it already had gone up 46% in value. If we keep looking at the chart further in time, 50% up in value, already something at around 24 hours later. You can see the timeline here. So we're tracking from August the 28th 3 a.m. until August the 29th at let's go ahead a little bit, yeah, so 3 a.m. once again. It's something at around 50% in 24 hours. So we can definitely bounce back from this in a matter of a day. Potentially you could do nothing and just wait for it to go back in range. The thing is that Launchcoin is a very recent coin, and that's why in the video that I posted before I kept on telling you about established meme coins like Bonk, Dogwith, Popcat. There's established meme coins in every ecosystem. Pepe on Ethereum, for example. All of these ones I mentioned are just launched in Solana, but this goes to show that newer meme coins, yes, they can yield quite profitable yields, but we are always exposed to this type of risk, right? So potentially you could just let your position sit there and hope for it to bounce back up. That can certainly happen. Or what you could also do is that you could take the loss. I mean, in a matter of a couple days, this position, when it was worth $80, it was yielding easily $10. So for the past week, even if I take this as a loss and I withdraw my liquidity, I will lock in that impermanent loss, right? But I know that in yield, I already surpassed this loss overall, and I made more money than compared with the potential loss that I would take if I would go and withdraw this position. So that's one thing it could happen. Of course, worst case scenario is that it crashes, and in the meantime that you have been yield farming this position, you wouldn't make enough in fees to cover for this potential loss, right? So that could be an even worst case scenario. Also, another thing you could do, you could take your liquidity out and leave the top range to be the same. So I have this, let me go back and show you, 0.0764, that's the top range. So we're talking about something like this, 0.0765, so it's good enough. So I could potentially open a new position with overall 30% range, right? Slightly under the current price. So the top range, I would let it be the same, and then on the downside, I would have something slightly above or slightly below the current price. If you open slightly above, you will not need to put more money in it. It will give you a warning that the position is out of range, but what's going to happen is that if the price starts to rally and bounce back up as it did here in this small time frame, as you can see, you will generate fees once again. If it doesn't, well, if it keeps falling down, it goes without saying, we're still losing money and our position will keep on losing value because it is fully made out of Launchcoin, right? So that's worst case scenario. The best case scenario is that it bounces back up, it goes into range, it starts generating fees, it goes back into that same market price that it was before, and we catch all of that volume. Plus the appreciation for Launchcoin, which will keep on getting sold for USDC. So essentially we're catching up fees plus potential price appreciation for the token. That would be our best case scenario, right? Also, it's very important to note that if you do this, and we're talking about setting a new position with something at around 40% range, your APR will dilute a lot. Back here, I was having an APR of over probably something at around 4,000% on average. Incredibly high. But if you open something like this, you'll have a much lower APR, probably at around 1,000%, moment. So let me go ahead and create a new position just as a way for simulating the whole thing. So current price is 56. So let's put the minimum 56 and the max would be, let's call it 75, which is at around the max price that my range was. So if I would create a new position like this, you can see the fees overall, they are very close to 900%. So our APR will be very much diluted, but still 900% APR, it's still really good yield. Plus remember the potential for catching up all that volume and the price appreciation. So this is actually something you could do when things go south and your position drops value massively, because this is actually the biggest risk for providing liquidity into high risk pools. I hope this helps beginners out. If I'm going too fast, let me know in the comments. But I like to share these things because so far, for the past month that I've been doing this, I didn't catch such big price crash in a coin so far, but also that's because I have been a bit selective on the type of high risk pools I'm choosing. Once again, if you want to experience more than 1% a day gains, like something 3-4% a day, sometimes more, you can still do that with more established meme coins, and that's what I would advise you to do. But of course, the best practice and the best option would always be provide liquidity in the long run for blue chip assets, Bitcoin, Solana, Ethereum, BNB, something along those lines. That would be my preferred thing to do, and actually that is what I have been doing for the past years, and I'm not earning crazy yields on that, like 1% on average. Sometimes yes, but most of the time it's lower than that. So these high risk pools are definitely more of an option for people who want to take the risk, and if you want to take the risk starting with a smaller bag, you can definitely make it work with this. But the whole point of the video is show you the risky side of it. So what I'm going to do with this position is that I'm gonna let it sit for a couple days, wait for it to go back into range. After that, if it doesn't, potentially maybe I will open up a new one with a wider range on the downside to catch all of that volume in case it bounces back up, and hopefully it will do just that. So guys, thank you for watching. If you enjoyed this type of content, like and subscribe for more. If you have any questions, let me know in the comments. Your comments do help me out to know what type of videos to create next. So thank you for watching, take care, keep exploring crypto. I'll see you on the next one.